Yeah, we're at the end. We are 100%. There is not one doubt in my mind. I can't tell you it's going to be Tuesday morning at 8:35, but it could. It's over. It's done. Maybe we have until 2025 till we're like super in it. But the reality is it's already over. It's over. It's over. I don't know how to say it any other way than that. What do you want to do? When is the time to get prepared? Before you need to. The Fed, the IMF, International Monetary Fund, came out with a report that basically said private crypto's bad. Government crypto's good. If you can learn to see these patterns and see when patterns shift, then quite honestly, you can easily determine where we are in this currency's life cycle. I mean, there are lots of currencies that simply do not exist anymore, right? Fiat currencies, government-based currencies. And frankly, ours is going the same way of the dodo bird, being prepared so that if they cut me off, it doesn't bother me at all. I mean, it'll be a little inconvenient. I'm not going to lie. It's going to be different. But I have lots of real money that I'll be able to barter with. I have gardens. I have solar panels and wind. And I mean, I have my mantra.
Central bank gold demand in first half of 2023 was the highest on record. Why are central banks buying up so much gold right now, Lynette? What do they know that we don't know? Hello, and welcome to Crypto Street, where we bring you the latest and most intriguing stories from the world of cryptocurrency, investing, and economics. Now let's begin our enlightening discussion with Lynette Zang.
First of all, what's interesting is they made this announcement to great fanfare how everyone would have an account at the Federal Reserve through FedNow, and they did that in 2019. Why in the world would they announce that in 2019 and not bring it out until 2023? I mean, I think that's really interesting. But the fact that everybody's got an account, even if you're in a very rural area and you have your bank account at the post office, you have a FedNow account. Now think back to 2020 when they were sending everybody these stimulus checks, and they talked about how much easier would it be to push a button and just have all this stimulus money go into these individual accounts. So much more convenient, so much faster. So, there's not one doubt in my mind, but that the FedNow is a step in the infrastructure for the U.S. digital dollar, and they will probably keep the name the same because that's what they do. They try and keep things as much like what we're used to as possible so that we don't notice the transition until it's way too late. And when they're trying to make a transition, one of the things, this is another thing that they always do, and we saw it in when they wanted to get people used to the digital currencies. I mean, personally, I do not think it was a coincidence that Bitcoin was launched in January of 2009 and that quantitative easing was launched in March of 2009. And typically what they do to get eyes on it is they allow the public to make lots of money. And a lot of people made a lot of money with these cryptocurrencies, right? And recently, well, maybe about a year ago, the Fed, the IMF, International Monetary Fund, came out with a report that basically said private crypto's bad. Government crypto's good. So, but they had to get adoption. And so by the time that they wrote that report, at that time, about 16% of the population had in some form or another dealt with, owned, bought, sold, whatever, some cryptocurrencies. 16% is enough adoption for people to be comfortable enough. And when you read the writings of the International Monetary Fund, the Bank for International Settlements, you read these things they tell you how exactly they are going to make this shift. And they are going to keep it as close to what we're used to as possible. And they've been moving us in this direction really since the 20s. It was in the 20s when individuals could actually get credit, right? So that definitely helped to build to that 1929 stock market crash. And then again in the 50s, that's when they first brought out credit cards so that you didn't have to have any collateral for it. So, you know, they do this slowly so that they get what they want. That's that 2% inflation. I mean, honestly, that's such garbage. I can't even stand it. The 2% is the level where you don't change your behavior. You don't ask for a raise, which is what they define as price stability. You know how they're always saying, our aim is price stability. Well, that's not the price of goods and service. If you hear that, you assume they want the price of this glass to remain the same, stable. No, what they want is they want your wages to remain stable so that inflation can erode them and you don't even know it. The Federal Reserve and the IMF has said, once we have a digital currency, and I'll tell you, they told you how they're going to sell it, right? We're going to have a hyperinflationary event.
Yeah.
And they're going to bring this out and tell everybody, if you let us do these CBDCs and accept this, there will not be any more inflation. Heck no, there'll be deflation. Because officially, there's virtually no purchasing power left in any of this crap. There's no purchasing power left officially. There's 3 cents. So if you get to zero, then what do you got to do? You got to attack principal. That's what negative rates are about. They tested it. They didn't get a lot of volunteers, but if everybody is in a CBDC, then they don't care if you volunteer or not. If all your wealth is held there, you have no choices. You have no freedom.
Don't forget to join us as we explore the unfolding events. Let's dive into some topics and then back again to Lynette Zang. The de-dollarization drive is facing a confidence crisis as the yuan, ruble, and Argentine peso simultaneously plummet. An analyst says, BRICS Bank could issue digital currency for the economic bloc. Analyst says, Javier Milei's victory in Argentina causes a devaluation maelstrom, and Bitso launches a cross-border institutional payment service. SEC files motion to certify interlocutory appeal of Ripple XRP ruling. Consensus pause. Majority of economists predict no rate hikes for 2023, with cuts delayed until March 2024. Farmington Bank faces Fed wrath. Alameda-backed financial institution ordered to shut down. Nobel laureate Paul Krugman states Argentina should adopt the euro instead of the US dollar.
What they know is if they want to hold their power and their freedom, they have to hold gold, because whoever holds it retains their choices, retains their power. They want to stay in power. And they know that, and this happens again, 100% of the time. There are over 4,800 fiat money currencies, so government-based currencies that no longer exist. But gold, they always then bring gold as a component of the new money in them. And they will this time because they're going to need to get the public confidence back again. And that is a big part of the problem. This is a con game. It requires confidence. When all confidence is lost, and got to bring back the gold.
What's happening in the crypto market? Bitcoin is giving plenty of longtime market participants reason to forecast a return to its previous cycle's $20,000 all-time high, or worse. That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.